Disclaimer. This presentation is not investment advice. This is not an offer to buy or sell any security. The information contained herein is believed to come from reliable sources, but we can make no guarantee of its accuracy. Please review our disclaimers and terms of use/service at our website. investwithwillow.com/disclaimer.
All right, so I'm just going to dive in here and give a quick digital asset update on Willow crypto and the digital asset markets in general. All right, so big news in crypto world. We're going to go through several areas. First, I want to touch on some major developments that have happened in the space, then sort of zoom out, look at what's sort of happening at the bigger macro picture. And then look at some of the metrics that really determine what the health of sort of this entire space is. So biggest news out there is that Ethereum merge was successful. And I won't get into the details. If you have questions on this, you can reach out to me later. I'll be happy to explain it. But basically, Ethereum moved from a proof of work consensus mechanism to proof of stake, resulting in a 99.95% reduction in the energy required to provide the economic security that proof of work previously had provided. This is a huge technological development. Nothing like this has ever been done before in the crypto space or anywhere, really. And it's just a sign that the minds working on this are brilliant. And it's a really good thing overall for the entire ecosystem. As now a new way to provide economic security that doesn't use anywhere near as much electricity as proof of work mining has successfully proved itself. There are different types of staking out there. So you might have heard other coins that are cryptos that say, oh, well, they're already proof of stake. Most of them are versions of what's called delegated proof of stake, where you're still reliant on one person or group, and then sort of everybody pools their funds and gives it to them, which could arguably be another centralization vector. But this really provides a way that makes it much more accessible to much more people. This is really the major theme I want to talk about today, is that crypto crash was good for industry, weeded out tourists. So there's two ways to think about the digital asset space as a whole. You have speculators all over the place trying to make a quick buck, and then you have some extremely, extremely brilliant minds who are working on this space, trying to bring this technology to the forefront because of how disruptive the potential is with what it can do in terms of disintermediation, new coordination tools, new ways for people to transact and organize globally with many less friction points. So while markets have been down considerably over the past year or so, in terms of the crypto ecosystem, that is arguably a good thing. As many of the tourists have moved on, whereas the settlers to the Web 3.0 space have really hunkered down and continue to build significantly. And I'll dive into that a bit more. You can see that this chart just shows the total cryptocurrency market cap, which has gone from a peak of about 3 trillion back in mid-2022 or so, down to about 1 trillion now. Now, this is a massive drop. I mean, a 60% plus-ish drop in the entire space, right? And we're only talking about 900 billion or so currently. This is still a very much small market and emerging, asset class all on its own. You can see throughout crypto's history that you have these major spikes that are followed then by these sort of bear markets or consolidation distribution type periods. Fully expect that we're most likely going into one of those going forward, but we do still have very much a lot of conviction around what the space has to offer. Again, this has always been a long-term play on getting exposure to some disruptive technology. Volatility should be the expectation. Just wanted to follow up on some really recent news headlines because I thought these were quite interesting. There's a lot of, crypto really has fallen out of favor in the news. You really don't hear about it talked about that much unless it's something negative. But Christie's auction house, major art dealer, has announced that they're really leaning into the whole Web3 space and putting resources towards developing a whole platform to sell NFTs and digital art. Some really interesting reports out of Africa. Like one of the points we made to many, one of our first videos was talking about how the developed world needs this sort of less urgently than the developed world, where they have the ability to really latch onto this technology and grow significantly from it. Whereas many of the infrastructure pieces that we are used to in the developed world, they work. You could argue that they don't work the greatest, right? When you do a transaction and you're Venmoing someone, it actually in the back end goes through, 5 or 6 different mediaries, and you could argue that that's an inefficiency. But for the end user, it works. Some countries don't even have any of that infrastructure, so this is a huge leap forward for them. What I do believe happens, guessing at this, but you would see these types of countries really adopt this type of technology because it's cheaper and it's probably easier for them to do than it is to bring in major Western companies to build out infrastructure. Another major interesting point here, Disney is also leaning big into the whole NFT space. So there's lots and lots of publicly traded companies out there that are putting resources into developing all different ways to sort of adopt this Web 3.0 and move. Well, they can make money off it, so that's pretty interesting. One of the things that we hold in our portfolio is a token called Chainlink. They are doing some very, very interesting things. They just had a conference. I believe it might still actually be going on. But one of the things that they just released was that they are partnering with the Swift network on cross-chain interoperability. So they are running proof of concepts with things like the Swift network, which, as you may or may not know, is like how most of the world settles funds from, or how interbanks or banks message each other and settle funds across the world. So that's a pretty significant development. I wanted to show this chart because it looks at what different blockchains are actually producing in terms of revenue or fees, that it's not just this zero-sum game, or that they're not complete waste. You can see that these protocols are still pulling $4 to $5 million per day in fees. What that says is another way to look at that is block space demand, because what do blockchains sell? What is the product of a distributed ledger, of a blockchain? Is block space, right? The space on those blocks, and it has a cost. And so this looks at the different chains out there, 10 of the largest, and then how many fees are generated currently on them. Ethereum is the dark green, which represents probably the vast majority of fees, while Bitcoin is sort of the dark purple, showing that it's not really generating that much in fees. And then you have some other players like Polygon, Solana, and then some of the Ethereum layer 2s, which are growing, but it's still small. This chart looked a lot different during peak usage when fees were through the roof, but this still shows that even in this depressed period, with blockchain out of favor, with most of the hype evaporated, that these networks are still being used to the tune of $4 to $5 million per day, which to me says something. This chart shows the total value locked in different protocols and different DeFi or decentralized finance. What this is essentially saying is how much money have people put into these protocols and locked them up via different financial products that are offered on blockchains. And it's still, even with everything, sitting at $63 billion is currently locked in these. And while it has come down from its high of around 240 or so billion, still sitting at the 63 billion mark. With current global conditions, all things considered, not bad, right? Looking back at 2009, where these numbers were in the millions. So, one of the major use cases of crypto, we believe here, is stablecoins. And what stablecoins are, just essentially a way to take a dollar and put it on a digital platform, or to take your currency, your dollars in your wallet or in your bank account, and then put it on a blockchain, so that blockchain then has a unit that can be used for interacting with different protocols or services to be spent, invested, lent out, whatever else. The fact that this market alone is still in the 240 or so billion dollar range, to us is a sign that it's like, look, even though recent news in the market is pretty negative towards crypto as a whole, well, markets as a whole, looking at the bigger economic picture, there's still over hundreds of billions of dollars in the space using these stable coins. There's talk of central bank digital currencies. We'll see how that goes. But in the meantime, here is a way to have like public-private partnerships with companies like USDC, which is the red one. Is Tether, which represents the most. And it just shows that even though there's been a massive drawdown in the crypto space, much of that money has actually stayed in it. It has just moved from the more speculative assets, investing in the different types of cryptos directly, and instead moved to stable coins, where potentially people will sit out and wait for opportunities to then deploy that when conditions change. So this is, I think, a chart definitely worth watching. It also signals sort of what's happening in the space use case wise, and here too shows the volume traded of stablecoins. So you can see there's been this huge uptick of volume traded, and it hasn't really relented, even given current conditions. So all to really say that these platforms are being used. They are starting to find some product market fit, which is arguably a great thing. But that's really all I have in terms of charts and things to show you. I could go in a whole bunch of directions, but when we look at our current crypto portfolio, right, recently it is down. Remember, this is a long-term 5 to 10 year time horizon type of investment. What we do notice is that in the past, these trends really do follow market psychology a lot, especially since this is at still the early stages of this space. If you have any questions, feel free to type them in the chat. I don't know if you have the ability to raise your hand. If you do, I can allow you to talk. So I'm just going to give it a minute, see if any questions come in. Again, if you do have more questions or want to get a bit more technical on some things, please feel free to reach out, shoot me an email, give me a phone call, 413-236-2980. I would be happy to talk about any of this stuff and go into much more detail. On these calls, we don't get too into the actual portfolio, but I would be happy to discuss one-on-one with how our current allocation is and where we're at. All right. So with that, thank you for listening. Thank you for joining. And please, again, feel free to reach out should you have any questions. Thanks.